But let's go out to Ohio and speak with Tim. Tim, thanks for calling. Thanks for holding. How are you today?
Okay, how you doing, Steve?
I'm doing very, very well. Thanks so much for asking. And you want to talk about the spot volatility index, I suppose?
Well, yeah, I've been listening to you for a little while now, and one thing that you often refer to is the spot volatility. And there was one thing that you said some time ago, and I kind of wrote down a note about it. Unfortunately, I wasn't that thorough with my notes. I don't know the explanation around it, so I thought, well,
Oh, that's okay.
I thought I would call and see if this is a similar pattern as you were referring to in my notes, which, as I said, I don't have quite all the information to. You had mentioned that if the VIX changed around 10%, and of course it's much more than 10% right now,
Yes.
that might prelude an opportunity, I should say close 10%. That might prelude an opportunity for the S&P to turn around the next day. As I said, I don't have much more information in my notes beyond that. Hopefully that gives you some recollection of what you may have been talking about, and if this is a similar situation to when it happened before, because that was a spot-on prediction that you had the last time.
Well, geez, Tim, I don't have a clue as to what you're saying. It must be somebody. I'm just kidding you. No, it's perfect. It's exactly. You have it exactly right. And when we take a look at the spot volatility index, I don't know if you're watching us on Tiger TV or.
In fact, I'm on the audio stream, and I'm a little bit behind. So I was hoping that you hadn't covered this already.
I have not covered it, so we're good.
Okay.
So we're good. So the chart that I have up on my screen, you can watch the archive of it. What you will see is you'll see green and blue arrows on this chart. And those arrows represent days where the spot volatility index has a one-day rate of change either greater than a plus 10% or below a minus 10% out there. Which we're dealing with today, because it's up by 31% right now, is a day where we have a reading above 10%. What you should see, so if you were an equity futures trader and you were short-term short and you come into the close at 4 o'clock today and this spot volatility index is up above 10%, you would be anticipating that you would see some type of pattern where there would be at least some type of bounce inside the ES mini out here. It also may extend into the actual opening session tomorrow in the cash marketplace, and it can be a sign of a bottom, a bounce or a bottom out here. And if you look at all of the other blue arrows on my chart, you will see that 8.5 times out of 10 that is the case. That's why when you wrote those notes down and you say that that was a good call, it was just simply because I had the probability on my side of past experience knowing what that actually means. Why it works like that, I don't know. I just know that it does, and you would pay attention to it. There's also some other. So does that help answer at least that portion of your question?
Yes, indeed. And I guess the only follow-up is there any other circumstantial evidence that you can see that makes this situation different than any of the others,
than prior ones? Well, here's a couple pieces of information. So that's a great question. You must be an attorney. I meant that in a kind way, because some people might say it, but there is additional information that we need to consider before we go ahead and make a ruling here. Right now, if I take a look at the spot volatility index and I compare it to where its counterpart 3 months from now is trading, 3 months out, if I do what I like to do is I like to divide those two. And when those two get to a result of 1 or greater, and right now we're at 1.01, that too is a sign of a bottom. I also like to compare it to what the 6-month contract is trading at. I don't have that on my screen at this stake here at this point, but what is also on my screen at the very bottom panel, so you want to catch the archive, is the Richard Arms Index, the TRIN index out here. And when that gets to a level of 2, and right now it's trading at 1.97, so it's really kind of close enough for my work, that too can be a sign of a bottom or at least a bounce. So the other evidence, it's not circumstantial, it is factual evidence. If you get all of those things lining up with each other, then what you and I can say is there's going to be a bounce, or one hell of a bounce, or a bottom. and that today's market activity is nothing more than an overreaction out there, and that's how I would call it, and that's the other evidence to take a look at. And so when you get to your screen tonight, or and you can watch the archive of this show or whatever, you can just, if you just put in Steve Rhodes Trader's Edge today's date, it'll be on YouTube for God knows how long out there, so you can always go back and just spin it forward to about this segment here. Okay, my friend?
Yeah, and just as a quick clarification there, you're saying that doesn't necessarily mean that that would lead into the opening of the market tomorrow, but it would probably reflect
it would probably
the minis.
Absolutely. It would. Okay. It would probably. Absolutely.
I mean, is there any numbers that would suggest that it would reflect in the market tomorrow?
Hold on through this break, and we'll answer that question too. Welcome back, folks. We're on the line with Tim in Ohio. We're taking a look at the spot volatility index. By the way, the Dow is off 413. S&P is down about 35 points right now. So, Tim, the one thing we certainly want to make sure is that what you and I are discussing right now, it all depends upon where these indicators are at the close of today's cash session at 4 o'clock. So things could look totally different, at 4 o'clock. But if you were to get a reading between the spot volatility index and its 3-month counterpart, VIX3M is the signal, is the symbol used on my system out here, and that is above 1. Right now it's trading at 1.01. The probability is high that what the market is doing is trying to form a bottom, or at least a very good trampoline bounce area. If you get the trend index reading that is at 2 or higher, that too would lead to a bounce or bottom. And if you have a one-day rate of change greater than 10%, that's a signal for a bounce or bottom. It couldn't get better, really, than that for trying to play that move. Is it the set of tools you'd use for a longer term or intermediate term? No, you'd have to really take a look at other things. What's the one thing, if the session were to close right now and it's 4:01, and you and I are talking, that we would need to be concerned about? I think I must summarize that in essence was your last question out here, is where the spot volatility index is in relation to its 50-day exponential moving average. Right now it's priced at the 50 days at 1575, and the spot volatility index is 1713. When the spot volatility index closes or trades above the 50-day, Tim, that's where the most damage or carnage can be done in the S&P 500. So if a bottom, based on those signals, were to happen, come 9:30 tomorrow morning, we would see the spot volatility index trading below its 50-day level of 1575. That's how I would put it all together to answer your question. And I hope that helps you.
Thank you so very much.
You bet.